The gentleman from Illinois.
Thank you, Mr. Chairman. Chairman Bernanke, earlier this week, you took action to crack down on a range of shady lending practices that have hurt the nation's riskiest subprime borrowers and also caused a tremendous amount of economic distress in this country. Among other things, the Fed issued regulations that would prohibit lenders from lending without considering the borrower's ability to repay, and also would require creditors to verify their income and assets at the time of the borrowing. These are pretty basic. Although hindsight is a 20/20 issue, and it's easy to sit here and say the Fed should have taken action a long time ago, the evidence of this housing bubble has been going on for some time. And my question is, what took the Fed so long to act? And then the regulation you're coming out with is not going to be effective until October 1st of next year. And those are the issues just involving the subprime borrowers. As to the regular borrowers, you came out with another landmark regulation that says whenever a borrower gives a check to the bank, that the bank has to credit that day to the borrower's account. I mean, this shows knowledge of some very basic problems that have been wrong in the housing industry. But what took the Fed so long to act? And why wait 15 months before the regulations go into effect?
Well, the regulatory process itself imposes certain time constraints. We obviously have to make sure that our rules are consistent with existing law, including state as well as federal law, that they make sense economically and so on. So it does take some time to develop these proposals. They're quite elaborate. And then there's a requirement.
Sir, these are not elaborate proposals. These are very basic statements that say nobody can take out a loan on a house unless he can afford to pay it. What's so elaborate about the statements that you came out with?
It raises issues according to what kinds of liabilities might be associated with that. Are there circumstances in which, say, with a long-time relationship between a bank and a customer where you don't have to go through the paperwork? Those kinds of questions are still there. And I just was going to add that under any circumstances, we have to have a comment period to get input from the public. We have to revise our regulations.
But you didn't start till December.
So there are two questions. One is the length of the regulatory process, which is basically what we have to do to follow congressional.
The question is, why did you take so long? You didn't do anything till December of last year.
I described in my testimony of July here that we were going to do a top-to-bottom review of all these issues, and we were going to act as quickly and as effectively as possible. And we began that process, and we have supplemented it, as you know, with considerable work on the credit card side. We have worked also in...
Chairman Bernanke, a lot of people in this country are losing their homes. The Fed has the responsibility and the authority. You could have moved a long time ago and stopped a lot of this. I mean, why does it take months, if not years, to have a very simple statement that you can't buy this house unless you can afford to make the mortgage? These regulations are not that revealing. And you talk about you need a top-to-bottom review for something this simple? This is inexcusable on the part of the Fed. Notice I said on the part of the Fed, not you.
Well, at the current moment, as we all know, the subprime market is pretty moribund. And these rules are important, but they're not having much impact on a market. What we hope to do is have rules in place so that when the market comes back, as it someday it will, that the lending will be done in a way that's prudent and also supportive of home ownership among people with more modest means. That's our intention, and we have followed the regulatory principles in order to do that.
And then with regard to regular loans, you have proof, do you not, that homeowners are making payments to lending institutions, and the lending institutions are holding on to the checks while interest grows on the loan and waiting days before applying that money to the principal balance of the mortgage. Isn't that correct?
We have addressed in our regulation some issues about servicers and how quickly they have to apply the money and to make sure that it's fair and transparent.
It simply says,
No, I'm sorry, the gentleman can't ask questions after the 5-minute rule. We have a
Thank you.
full